Good afternoon, everyone. I'm Greg with Key Performance Ideas, and I would like to welcome you to our webinar on Project Planning in Enterprise Planning and Budgeting Cloud Service, or more commonly known as EPBCS. Today's webinar will be presented by Ali. Ali is an Oracle Hyperion consultant. He has worked with a variety of clients across various industries to implement successful planning, budgeting, and reporting solutions. During his time, he has played an active role in all parts of the project lifecycle, from requirements gathering and design to implementation and finally knowledge transfer and training. Adept at addressing the needs of clients of all sizes, Ali has helped deliver complex yet easy to use solutions that support the client in reaching their intended objective. Ali, welcome and thank you for joining us today.
Thank you, Greg. So the purpose of today is to really help you guys feel a little bit more comfortable with the project planning module's capabilities, as well as to how these capabilities will actually be integrating with your day-to-day planning and budgeting tasks. So we're going to start off with a high-level introduction into EPBCS, and then we're going to talk a little bit more specifically about project planning, and then finally we'll move into our demonstration. So when we talk about Oracle's EPBCS, what we're really talking about are these four modules you see at the top. And in this case, we're considering financials and strategic modeling to be one and the same, along with workforce, capital, and then finally projects we'll be focusing on today. And the purpose of EPBCS is to really enhance the value out of the box by empowering the end user. This is done by streamlining the planning and budgeting process to free up time on the back end for the end user to really optimize their decision making and ensure that they're making the best possible choice for their company, as opposed to spending copious amounts of time on the front end dealing with the planning and budgeting process itself. So Oracle has identified these four business processes as not only being in high demand, but also having relatively unique planning and budgeting characteristics that would require some level of customization. So simply, Oracle has already gone ahead and pre-configured or pre-customized these databases to accommodate those needs. Now, before we move forward, I do want to point out the fact that the project module does integrate with financials, workforce, and capital, but that will not be covered in today's demo. So when we talk about project planning, we're talking about these four tiles on the left-hand side. And starting with project summary, what you basically get is a high-level overview of both internal and external projects. And don't worry too much about the difference between those two. We'll get to that in just a second. But project summary is really where you would go to add and remove new projects or remove old projects, or to change the start and end date, or generally take care of any high-level tasks. Next, I'm going to talk about expense and revenue in tandem because they share a lot of similarities. For example, they both utilize driver-based models to help expedite that planning and budgeting process. But they can also use direct input methods or a hybrid approach if necessary. They're also both configurable by industry. And what we mean by that is that they can be set to time and material, cost plus, or direct revenue. Now, the expense tile in particular also allows you to track capitalized versus expense costs, which can be quite the tedious or cumbersome task, especially for companies that invest quite heavily in capital. And on the revenue side of things, you can track both financial and non-financial measures of benefit for internal projects. And once again, don't worry about the difference between internal versus external. We'll get to that briefly. Lastly, we have the analysis tile, and you can think of this as your central data warehouse or repository, where you can go to extract any necessary data, as well as track a variety of KPIs, including but not limited to net present value or NPV, IRR, or ROI. So now, as promised, let's talk about the project classes, and there are three different kinds of project classes. And those are contract projects, indirect projects, and capital projects. And contract projects are the only projects that are considered external projects, because they're client-facing and generate direct revenue. Whereas on the other hand, indirect projects and capital projects are considered internal because they don't generate direct revenue and they're not client-facing. So you might be wondering, well, why are we talking about indirect and capital projects in that case? Well, starting with indirect projects, they typically consume about 60 to 70% of most companies' budgets. And this is where you house efforts relating to IT, R&D, and marketing. So they definitely align with our financial outcomes and KPIs, although maybe they don't impact revenue directly. So if we take this example on the left-hand side, new digital web mobile, or the creation of a new mobile website, You can imagine that this website may not directly generate revenue, but it could increase the number of digital leads that we gather, or increase consumers' general awareness of the company. So it definitely does have a very important impact on our bottom line. And when we talk about capital projects, they're generally going to be more important, as I mentioned, to companies that invest heavily in capital. But every company has some level of capital, so it's going to be important to them to some extent. And this tool really allows you to track material, labor, and equipment expenses, which can be quite tedious, with a lot of ease, along with tracking capitalized versus expense costs as well, which, as I mentioned, are quite cumbersome. So now moving on to our demonstration, the first thing you're going to want to do is connect your application and log in. Once you do, you'll be taken to a screen that looks like this. And from there, you'll select the projects tile. Now here at the bottom, we can see the 4 different tiles that we were talking about earlier: project summary, expense, revenue, and analysis. We'll start by selecting project summary. So this is the landing page that you'll be taken to. And here you're going to see a bunch of dashboards that track various metrics along with some ROIs at the top, or excuse me, KPIs at the top. So here you can track things like project hours. Here we can see we have on-site labor hours versus off-site versus non-billable hours. You can track things like billable versus non-billable in general, project spending graphs, and so on. And this layout is relatively standardized, so we'll see these dashboards across the board. Now the other thing I should point out is the fact that here we're only looking at contract projects, whereas if we want to look at indirect projects, we'll select the second tab, or capital projects, we'll select the third tab. And we'll get to that in just a second. So when we select this projects drop-down menu, all these projects are only going to be contract projects. And so, for example, let's select Future Engineering 2020, and let's select FMIT and hit go, and we'll see these dashboards change to reflect that. So this essentially is considered your POV, or your point of view, and this is where you can slice and dice your data to really look at whichever segment that you would like to. So if we wanted to choose a different entity, for example, aside from manufacturing US, you could select marketing US, sales US, or we could even go up a step further and select a different entity in Canada, for example, or possibly select an entirely different entity in a different continent, like Latin America. And you might be concerned, well, our entity structure doesn't really look like that. How would this accommodate our needs? This actually pulls from the entity dimension that you would have in Oracle. So regardless of what your entity structure looks like, it would actually look exactly like that. It would replicate it, and it would meet your needs. For now, we'll hold on, and we'll keep looking at manufacturing US. But let's jump over to the second tab, contract projects variance. And here we're going to see a few more dashboards. Of course, they're looking at some other metrics and tracking other things. But generally, this is going to be a quite common theme. And we'll skip over project details for a second and jump into EVM, or Enterprise Value Management, where we'll see some more dashboards and some more things that are being tracked. But here you can look at things like the estimated completion date, variance at completion, the percentage that's complete, and actual cost of work performed. Now going back to project details, this is essentially where you're going to take care of all those high-level tasks we were talking about. So on the left-hand side, we can see the names of the various projects. And then in the columns, we can see the start and end date, the project description, the project status, revenue recognition, cash flow incidents, and so on. But I do want to go to the Actions drop-down menu to showcase how you would add a new project. But before we do that, I want to also highlight these various options like Calculate Project, Approve Project, Delete Project, and so on that you can also utilize. It's also important to note that you should always select Calculate Project and run that whenever you've made any changes to any of your projects to ensure that those changes are actually pushed through and reflected in your data. So now let's go ahead and select Add Project, and we'll be taken to this screen. And so since I'm not going to actually be adding this project, I'll just call it Test for now, since we need to fill that in. And you can enter a project description if you feel the need to. And then we have a project start date and end date that need to be filled out. So I'll just select the first and the end of the month. And then I'll hit Next. And here we can select the project type, which goes back to what I was talking about in the PowerPoint regarding time, material, cost plus, and fixed price. So you can choose whichever one suits your needs and select that. And then you can select the method of revenue recognition. So you have quite a few options here, from monthly to quarterly and so on, as well as performance obligation, which I want you to keep in mind as we'll address that later on in this presentation. can also determine when the revenue cash flow incidence begins. So that can either be 2 months before or up to 4 months later. And once you finished making your selections, you would simply hit launch and the project would be added. But in this case, as I mentioned, we're not actually going to add the project, so I'll just hit cancel. Another thing I'd like to point out is that this is what's considered a form, and any screen that's a form can actually be exported into Excel for whatever analytical purposes you may have or may need, or it can be opened up in SmartView and actually changed from in there. So I've actually already gone ahead and done that, and we'll look at SmartView first. As you can see, this is simply the same screen in Excel, and you can actually go ahead and make your changes here and submit them, and these changes will be sent to the application, and the application will reflect those changes. So if you're more comfortable with Excel, this might be a path you would want to follow. And then if we look at the Excel extract, and this granted is a very qualitative screen, so it might not be the best to extract into Excel, but if you need to keep track of this information for one reason or another, it's very easy to extract in that sense. And here you get a general idea of what that would look like. Let's jump back into our application and move on and talk about indirect projects. So here we see that project that we're using in the PowerPoint as an example, new digital web mobile, along with some other indirect projects. And you'll notice the screen looks pretty similar. It's tracking some various metrics that might be slightly different than what we were looking at earlier, but it's still the same standard screen. And you'll see that, as I mentioned, the layout is pretty standardized across the entire tool. So we'll go through indirect projects variance and EVM quite quickly, just so you can see what that looks like. Confirm that for yourself, but as I mentioned, it's pretty much the same. Now in here, the primary difference you'll notice is that we do not have that revenue recognition column or that cash flow incidence column, which makes sense because, as we mentioned, this is an internal project, and so it doesn't directly generate revenue. But you can still add projects, calculate projects, and use the same options that we saw earlier, including exporting into Excel, as well as opening this up in SmartView. So here we see those two at the bottom right here. Now jumping into capital, I do want to highlight something that we don't see elsewhere. So if we go to project details, we'll notice is that we see this new column capitalizable, which allows us to determine whether this project has capitalized expenses or not. And if so, and both these are selected as yes, as you can see, we can jump into project capitalization. And from here, we can actually control what percentage needs to be capitalized. So this is a new tab that we didn't see in the previous two for contract projects and indirect projects. What we notice here is that we have, for example, total labor expense and material expense both being capitalized at 100%, whereas total other expense and other direct costs are at 60% and 30% respectively. And if we scroll further to the right, we can see the corresponding capitalized expense values for each of those. So for example, we have 9.6 million, 1.8 million, and so on. Finally, we have the Assumptions tab. And this tab is essentially controlling the drivers for your driver-based models. So this is what helps you really expedite that planning and budgeting process. And what you'll notice here on the left-hand side is that this one is particularly looking at the standard rates for materials. And there are only 3 materials at the moment, but that can be increased or decreased depending on your needs. And here we have material UOM, or unit of measurement, and we'll find quite the extensive list that goes from per hour to per unit and covers things including per passenger and per barrel. And this is actually controlled on the back end with a smart list. So if any of these are unnecessary, we can always remove them. Or if you need any additional ones, we can always add them. And from there, all you would do is simply input the material standard cost for each year, as well as the standard billing rate. So there are 2 things that I want to stop and point out really quickly. The first is that oftentimes people are concerned and say, well, you know, for example, we don't really use materials that much. This might not be relevant to us. What do I do? You can just leave this blank. This, as I mentioned, controls your driver. These are basically your drivers for your driver-based models. And so if left blank, they just won't impact those driver-based models. The second thing I want to highlight is that this is a very useful place for you to really create various circumstances or various scenarios that you want to look at. So you can utilize, and then we would recommend you utilize either the version or the scenario dimension for this, but you can create various different versions. So you can have a best case, a worst case, maybe a medium case, and compare the financial outcomes from all 3. Or you can do something slightly different in terms of, let's say your material standard cost is increasing by 10% every year, and you want that to be reflected in your material standard cost. And maybe in one scenario, you're actually increasing your billing rate to correspond with that. And then the other, you actually keep it the same. And then you can compare and contrast the two, see the financial outcomes or the financial impact on your bottom line, for example. So this is going to be extremely helpful in creating a variety of different scenarios that you can use for analytical purposes and for optimizing your decision making. Next, we'll select the overhead tab. And here we see on the left-hand side a list of our overheads and then the overhead method. So we can select the corresponding overhead method for each. And once again, we have quite the long list of options. And once we're done with that, we can simply input the overhead rate for each of the years. And once we calculate that, it'll of course push out into our data. The next tab is the discount rate. And if you're familiar with the discount rate, it's pretty straightforward. You just input the percentage and the tool will take care of the rest. Now for standard rates for equipment, this will look pretty similar to what we just saw under standard rates for materials, with some differences being, the differences just being that we're looking at equipment here. The equipment's unit of measurement list, or the UOM list, is slightly shorter. So we only have these three options, but again, this is a smart list. So if you need any more, we can always add them. And then once again, we would just input the standard cost and the standard billing rate for each of the years. Now the standard rates of labor works pretty similarly, but might look a little bit different. So instead of equipment or instead of materials, we actually have a variety of different jobs. So we see things like engineer, machinist, operations analyst, senior engineer, tester, webmaster, and so on. And each of these jobs has a standard hourly cost, as well as an on-site and off-site standard billing rate. And we can input those for each of the corresponding years. And we'll see a little bit later on in this presentation how these actually tie back in. But this is actually a pretty cool part of the application and a pretty interesting part of how these driver-based models work. So as I mentioned earlier, there are always going to be parts that maybe aren't relevant to your particular company or your particular industry, and you can always just leave those blank. In our case, we've left the working days and hours blank. This could be something that maybe is unique to you or you find is helpful, in which case you should fill it out. Otherwise, though, this is pretty straightforward and doesn't really need that much explanation. Now, the project financial statement mapping is the final tab. And one thing I do want to point out before getting into this is that the assumptions tab can be found under not only project summary, but expense and revenue as well. But if you want to take a look at the project financial statement mappings, that can only be done when you're looking at assumptions under project summary. So just keep that in mind. But essentially what we're seeing here is every single line item or output that comes out of this module is listed on the left-hand side. And every single one of these is being mapped to a corresponding line item in our actual financial statements. We have all the contract revenue currently being directed towards service revenue, but we could actually, for example, let's say change cost plus to support revenue, product revenue, and once again, let me open that back up. Once again, we see that this is quite the extensive list that we can go through. So let's hop over into expenses. And as I mentioned, you're going to see this standardized layout. So we're seeing those dashboards once again. Hopefully you're starting to get a little bit more comfortable with those. And here we can actually see the full list of projects because all projects have expenses, of course. So let's actually go ahead and select New Digital Web Mobile, and we'll hit go and see these dashboards update. And we'll see the same standardized layout in revenue as well. So I'll just go through it right now. But you have the driver-based model here, your direct input method on the third tab. Then this is sort of a sneak peek into analysis, and we'll see that in a second. And then finally, our assumptions tab. So let's go to the driver-based model. And we'll find a form that looks like this. And basically, this form, as we fill it out, will actually fill in the rest of our data. So we can select a phase. In this case, we haven't selected one. It's not something that's considered necessary in terms of the data by the application, but it's something that might be useful for you from a qualitative standpoint. And so we see that we have a couple different options here in terms of research, design, delivery, and so on. And then we would select a job. And so we can select from the various jobs that we selected or that we were actually setting up in the assumptions tab for standard rates for labor. And we'll notice that this value over here, the labor rate, actually corresponds with what we put under assumptions. So we'll just jump into assumptions really quick just to confirm that. So for project in charge, it was 70, for example. And here we can see, when you scroll down to project in charge, the labor standard hourly cost is also 70. Now keep in mind when you go into here, it will actually change your project to no project, so you'll have to go back and reselect it. So we'll go ahead and select indirect projects and then new digital web mobile again. Hit OK. Hit go. And we're taken back to the screen. And the next thing I want to point out in this following column is employee resource, where you can actually determine which employee is assigned to that particular job. And this actually integrates with our workforce module. So any of the names that we have in there will actually be pulled into here. Here we see some raw options like Rob Stark, Carly Yap, Paul Cranston, and so on. We could select one if we found that to be helpful or necessary. Next, we have the assignment start date and end date, the number of full-time employees, and then the assignment location, which I think is arguably one of the more underrated or underappreciated parts of this tool. So at the moment, we only have locations 1 through 3, which isn't the most helpful or descriptive, but this is a smart list. So much like I mentioned with the other smart lists, we can always change this, update it to reflect whichever values you would like to see. And the real benefit of this particular part of the tool is that you can actually assign geographic locations. And so if you're a company with a variety of geographic locations, it might become apparent to you that your current setup isn't necessarily feasible, given the fact that this particular employee, for example, needs to be in 2 very different geographic locations at the same time. The next column is our skill set column. And under the skill set column, we can actually identify which skill sets are needed for this particular job. So in the case of project in charge, we have project management, which makes sense. But if we select the drop-down menu once again, we'll see, all right, this is just taking a second. Well, we seem to be having some technical difficulties, but we should be able to see a list of all the various skill sets that you can select from. Oh, there we go. And so we can see that we have quite the extensive list here, but once again, this is a smart list that we can always change depending on our needs to reflect what skill sets are actually relevant to our industry or our company. Another thing before we move on is I do want to point out that the labor rate is going to be automatically plugged in based on what assumptions we've made, but that if at any point we need to actually change this or overwrite that value, we can always do so. So for example, we could input 84 as the new rate, and then we'll see that it's actually highlighted in yellow, letting us know that it hasn't been saved. And if we save these values and then hit calculate, that would be pushed out into our data, and our data would reflect that change. Next, we'll look at material. And we'll notice that this form is empty, but it's generally filled out the same way that we filled out the last form for labor. And the same thing will apply to equipment and other. And the reason for that is because this particular project is actually using direct input to input those values. So here we see the material expense, the equipment expense, and the other expenses are being input manually. And keep in mind, although this is looking at the year total, we can also go into quarters or months, depending on our needs, and plan at that level as well. But we're inputting the dollar value directly is the point. And so this is using somewhat of a hybrid approach. So next, let's look at the project's financial benefits. And so internal projects, as we mentioned, definitely have an impact on our bottom line. And although it's not direct revenue, it still can be financial in nature. And these are very important to our decision-making at the end. So for example, in the case of New Digital Web Mobile, we're considering the new revenue from the digital leads that we're generating because of this new website. And we've actually input a dollar value for each of these. And that could be crucial in determining which project we should actually move forward with, which project we shouldn't move forward with, as these are obviously going to impact which direction we go in, or whether this project is a reasonable project or a feasible project or not. Next, we'll move on to projects' non-financial benefits. And here we can track some other things like a customer satisfaction index and how we expect that to change over the years, along with the user base and the increase we expect to see in the user base. And we can also track some qualitative metrics, such as better customer experience with new user interface or localized experience for customers. So moving on to this fourth tab, this is essentially going to be a sneak peek, like I said, into analysis, and it's a good place for us to extract our data or extract this into Excel. So as you can see, you can also do that in here. It's just being a little bit slow, but here we go. so spreadsheet export. You can also open it up in Smart View, but that's not necessarily as useful since you can't actually input any values in here. But I've actually gone ahead and exported that already. And so here we see what that looks like in Excel. So it's quite extensive. This is, of course, fully expanded, so it goes down to the month level and also includes the quarters along with the years. So you can see there's quite a lot of data. And this could be very useful if we're trying to do any further analytics or in terms of optimizing our decision making or for whatever other purposes we may have. Next, we'll just dive into assumptions, and I'll showcase that that's the same, but we've already gone through this, so you guys get the idea of what this looks like. So moving on to revenue. This is only going to be applicable, of course, to contract projects, because contract projects are the only projects that generate revenue, as we mentioned. So keep that in mind. But we're saying that standardized layout with the dashboards. We'll actually switch this over to Future Engineering 2020. We'll see those dashboards update. Let's go into our driver-based models. So here we're going to see a similar form to what we saw on the expense side, although a little bit more simplified, and you'll notice that some of the things like the assignment type and the job are grayed out. And the reason for that is because those are actually being determined when we're actually setting up the expenses, so the tool doesn't need us to set those back up again. But we'll notice that we have our off-site and our on-site labor billing rates. Once again, we can confirm that these are actually pulling from our assumptions. So if we go down here, for our engineer, once again, we see that on-site is 190 and off-site is 180. We just change that back. And then here we can see the contract revenue for labor along with the rest of the data and how that's being pushed out. So moving into material, we'll notice that once again, that's blank, but it also looks quite similar and that we would fill it out in the same manner, along with equipment and other. And that's because once again, Future Engineering 2020 as a project is utilizing a hybrid approach of both direct input as well as driver-based models. So we see that material, equipment, and others are being directly input into these various intersections for each year. And once again, this can be planned at the quarterly level or the monthly level. We can simply expand it by selecting that plus sign. So in this case, for example, it seems like this is starting in Q3 of FY18. But let's actually jump back to the driver-based models really quickly. And let's actually go to cost plus. And we'll notice that there are no valid rows of there are no valid columns, of data for this form. And the reason for that is because this particular project is not a cost plus project. So that's the incorrect project type. But when we select the drop-down menu, we'll notice the tool's also smart enough to limit the options to the only projects that would be relevant, which are these two cost plus projects. So we'll select FMIT again and hit go. We'll see this populate. And this essentially is the screen where we determine the margins that we're going to be using for the various expenses in these cost plus projects. So in the case of total labor expense, we have a 45% margin. We can see the dollar value here on the right-hand side, as well as to how it pushes out in the upcoming years. Whereas for total material expense, for example, it's only 30%, along with its equivalent contract revenue value or dollar value and how that pushes out and so on and so forth. Next, let's jump into revenue recognition. And we'll actually go ahead and change this to Project Diablo. And the reason for that is because earlier on I mentioned performance obligations and how that's something that's somewhat unique and we'll be getting back to. And I want to showcase that in this particular part of the tool. And so here we see revenue obligation details, and we can see a list of our obligations, as well as some details about those obligations. So we have basic build, complete phase 1, phase 2, project pre-final sign-off, as well as final sign-off. And we'll notice there's a revenue recognition percentage associated with each of those. So for example, basic build is expected to be completed in April of 2018. Once that's done, we'll recognize 35% of that contract revenue. And then we complete phase 1 in July, we'll recognize an additional 20%. And when in September we complete phase 2, an additional 20%, and so on. Now we'll jump to the fourth tab, or the analysis tab. And this one's even named after the analysis tile, so you know it's a direct, it's obviously a sneak preview or a direct pull from there. So I won't spend too much time on it, but I do want to showcase that you can change the project that we're looking at. So we can change that to FMIT, for example. So you can slice and dice, as I mentioned. And we'll see that reflected in this new sheet. And there's a couple different tabs we can look at. For example, one that's more focused on profitability, another more focused on cash flow, and so on. And then finally, we have assumptions, which we've already addressed. So now we'll move on to analysis. So I hope you like dashboards, because obviously you're going to get quite a few of them in this module. But here we see some of those dashboards again. And then we can select from the profitability tab on the left-hand side. And we'll see a lot more of these sheets that I was talking about earlier. And so here, this is obviously a good place to stop and extract this information if this is useful to you. There are quite a few different sheets, just in case different sheets maybe contain the subset of data that you're looking for, are more focused, or maybe less focused, depending on what you're looking for. But we'll flip through some of these. We won't spend too much time on them because there's quite a few different ones, but just to give you an idea. So we're seeing profitability again, cash flow. We've already seen project profitability rolling, so let's look at project profitability rolling cash flow. And here we'll see another one. And these, once again, can either be expanded or contracted depending on your needs and so on. The third tab is more focused on rolling forecasts, but once again, we're going to see a lot of these sheets again. Project cash flow, for example. Total project expense rolling forecast. And you get the general idea of what this looks like. But again, depending on which one works best for you or for your analytical purposes, you might want to pick and choose. And once again, these can also all have their POV changed. So if, for example, you want to look at a couple of different versions, like we were saying earlier, a best case, worst case, and a middle case, and extract those out for this particular project to FMIT, you can always do that, and then complete your analysis on the back end through Excel in the way that you would normally do. The primary difference being that you really expedited the process in terms of of creating this data, allowing you to actually jump into your analysis that much more quickly. So the fourth tab is what's called the program tab, and here we can look at some more dashboards. So we can see some program KPIs, and we can look at different subsets of these projects. So we can select, for example, transformation, hit go, and we'll see that's changed, that reflected in the actual dashboards. And then program performance, which is going to have some more dashboards once again, but tracking, of course, different metrics. The final tab is the forms tab, and this houses every possible form or every form that has in any way touched this particular module, the project module. So anything that's related to the project module can be found in here. And this can be quite useful if you're trying to figure out where certain data is coming from, if you're trying to figure out where certain dashboards are pulling their data, or maybe even if you're just trying to extract certain pieces of data and you find this particular form has that information in a much better subset for your purposes or for your analytical purposes, like I mentioned. So if we take a look at, for example, total project expenses, we can see this dashboard right here, or excuse me, we can see this data right here. And once again, we can change the POV to whichever project we'd like, entity, reporting currency, as well as version. And as I mentioned, these can also all be extracted into Excel through that spreadsheet export button, or open in Smart View, although that once again might not be as useful given this is really meant to help you extract data as opposed to input data. But that, ladies and gentlemen, is my presentation. Thank you for your time and thank you for attending. Back to you, Greg.
Thank you, Ali. And thank you all for joining us today for our webinar on project planning in Enterprise Planning and Budgeting Cloud Service. If you have any questions, please don't hesitate to contact us. Our contact information is displayed on your screen. Thank you, everyone, for joining us today, and have a great day.